Nah, this one's no good. This is just a building they're saying you can turn into self-storage. Wait a second. If you are a self-storage investor or looking to become a self-storage investor, let's talk about how do you analyze a deal in 2023 and make sure that you can feel confident about your analysis, or as the pros call it, your underwriting. Let's go through. I just want to show you, as always, I'm going to come to LoopNet, try to find something for sale. I come to the advanced search, and then I'm going to come down to specialty, and I'm going to click on self-storage facilities. I'm going to search here, and we're going to see everything that's for sale. As you can see, today is November 16th, 2022. Let's dive into some storage facilities for sale here, okay? Now, let's look around, and let's try to find something for sale that looks good. Let's see, we'll scroll through over here. I want to find something probably about $2 million. This one's $5 million, 3.4, LA packing house. Let's see what this one's all about. See if this will be a good one to analyze. This is an interesting one. Vacant land. Nah, this one's no good. This is just a building they're saying you can turn into self-storage. Wait a second. This is an interesting project here. Let's see. Gross rental income, $72,000, 3.4 million. Nah, I don't like this one. Let's find another. And the reason I don't like it is they don't have a ton of information about that one out there. For privacy, I want to find something where the broker has kind of listed all of the relevant information out there. Cool. All right, I think we found a good one. So we're going to analyze this one in Stuart, Florida. It's 15,950 square feet, a little bit smaller than I'd like it to be, but that's fine. Let's do this. So the goal, guys, is if I were to go and I were going to make an offer on this property, I'm going to just walk you through the process that I would do to get to an offer that I would feel good about, okay? So what I'm going to do is I'm going to just start in the My Property Stats platform, which I created to help me manage my properties that I already own, build a cool little dashboard out of it, give me all the key stats, help me make decisions on the portfolio I own, but also to analyze new deals. So I'm inside of my pipeline here of all the different deals that I'm analyzing or under contract on. I'm going to analyze a new deal from scratch. I'm going to walk you guys how to do this. So this is a, we'll call this Penn Plaza, right? So Penn Plaza. And we don't have to enter all this address line in. It's important if you're going to send it to, you're going to send your analysis to bankers or investors or whatever. But just for our purposes, we don't have to do it. We'll just give it a little nickname. We'll copy over the purchase price of $1,995,000 as the asking. And this is a cap rate deal, right? This is a cap rate deal because it's a commercial property. So we're going to select cap rate. And then we're going to say this is in Stuart, Florida, which is a pretty good location, right? I'm not going to call it a primary market. Definitely in the secondary market type range. So for this deal, I'm going to use a 7.5% cap rate. Why? Because I think it's probably a 6.5 cap rate today. But you're always supposed to analyze commercial real estate, especially in an environment where interest rates are expected to rise. You're supposed to analyze the cap rate at today's market cap rates plus 1%. So I think it's 6.5 today. My guess is that by the time I go to sell it, it's going to be a 7.5, okay? So let's look at our loan information. This is a big one here. So again, I think I can probably get a 75% LTV loan on this deal. And what I'm underwriting today is I'm underwriting a 6.5% interest rate. Now again, this is in November, mid-November 2022. I think that we're probably going to see another interest rate rise go up in December, and we might even see more in Q1. So Q1 of 2023. So I'm going to underwrite a 6.5, but stay posted, guys. These are probably going to continue to go up. So probably before long, if they go up again in December, I'll probably use a 7%, right? Next year, I might be using a 7.5% interest rate. But I'm always, this is just for initial analysis purposes. I'm always going to get a quote from my banker, talk to them about interest rates before I make an offer, and especially before I go hard on my earnest money. So we'll do a 6.5% interest rate, and I'm going to change my amortization schedule here from 360 months to 240. That's a 20-year loan, and that's going to make my monthly payment $11,155, okay? Now, I've got some prepayment penalties in here. It's going to be a commercial loan. I expect to get prepayment penalties, as you should always analyze. And now let's go through and let's look more at this deal, okay? Let's see if it needs any repairs or anything of that nature. So just going to read through here real quick. We can see it's got 2 buildings in the back, some open space, some open parking here. Let's read the property highlights. It says that this can be developed into 72,000 square feet of interior storage space. Here's a picture of the 2 buildings, built to the highest hurricane standards. That's great. Outdoor storage, awesome. I'm not really seeing that it needs any improvements. My guess is that it's got cameras, by the way that it's got a nice gate system here. It doesn't look like there's any damage. This sign looks pretty good. I mean, we might want to put a new one up here. Maybe that's, $2,000. Honestly, a pretty good looking facility overall. So I'm not really going to budget anything. I'll budget $5,000 for a new sign here. So let's go in and let's look at improvements. Let's do a new sign, right? And the new sign is going to cost us, let's just say $5,000. Perfect. And let's just continue looking through here. We're starting to get into the P&L for 2022, which is interesting. How do we have, if it's November, how do we have December P&L? Very interesting. So let's keep looking here. Closing costs, guys. Florida is expensive. Now, depending on where in the county that Stewart is in, which I don't know what county Stewart is in, but sometimes the buyer has to pay and sometimes the seller has to pay for the transfer tax, which is a lot of money. I'm selling a deal right now for $6.2 million. I'm having to pay the transfer tax. It's like $42,000. It's a lot of money. So I would look that up. My guess is probably the seller pays it, but I'm still probably going to have appraisal, environmental, survey, and then obviously title and closing costs, attorneys. My guess is that it's probably going to cost me at least $30,000 to close this deal. It's a $2 million deal, a little bit over 1%, which is fine. And then working capital, right? So I'm going to check all of these boxes because I always tie how much money I have in my bank account to run a facility to how much in expenses that occurs. I always have 2 months of all expenses. This number's at $22,000 right now, but it'll update as we keep on going. So here's kind of the total cost stack. Total cost of this deal, again, here's the purchase price, the improvements, the closing costs, working capital. Total cost $2,052,000, and then we're going to get a loan for $1,496,000. That means we need to bring $556,000 to the table to close this deal. So let's go see if that is a good investment or not, right? So let's read through here. We've got the profit and loss, and which is fine. But let's go through and let's look to see what they've given us about the units, right? Martin County is the county that it's in. 122 self-storage units, 60 outside parking spaces. Okay, cool. So we've got 122 self-storage units. So we'll do self-storage. And I really want to get more information from these guys. Let's see. Outside parking, I think it said that 60 of those. Yep, 60 of those. Number of units, 60. Let's go through and see if we can find out how many square feet. The reason I'd want to contact these brokers, and I'm not going to do it for this video, guys, because confidentiality and all that good stuff. But they've got interior units. If you see here, these are inside, probably climate controlled. They're probably charging more money than these on the drive up and the exterior, right? These are going to rent for different amounts than these are, even if they were the same size. Now, customers really like these because they can drive up to them, drop them out. It's really good that way. Let's see how many total square feet. It says that we have 15,950 square feet of storage. I just want to double confirm that. So what I'm going to do is I'm going to grab this. I'm going to come over here, look at it on Google Maps, and I'm going to come down. Let's look at it from the outside, and I'm going to get a rough area just from here. Measure the distance. Boom, 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 boom. So I got 8,423 on the first one. 8,423. 8,616, we're pretty close. So probably 8,500 times 2. gives us 17,000 square feet is what Google tells us. They're saying 15,950, so I'm going to take that. So we'll say 15,950 square feet of self-storage. So I'm actually just going to analyze this on the total. We'll do 15,950 square feet of self-storage, and we'll just say we have one of those units, just looking at the total. And I just want to go figure out, what is storage renting for in Stuart, right? What is storage renting for in Stuart, Florida? So let's go rent storage Stuart, Florida. Okay, so this guy said that he was down by downtown, right? Yep, here's the facility. Here's the map of Stuart. So we're going to look for stuff in this corridor here. So inside of this corridor, let's see what it's renting for here at Storage Mart. Let's go to their website. And here we go. So we got drive up, non-climate, drive up, non-climate, drive up, non-climate, 5x15. It's a weird size. We got a AC and heated, so a climate controlled first floor indoor, 5x10. That's going for 80. So 5x10 is going for 80. I don't like 5x10s because they're really on the smaller side. Let's see what they have in the medium range here. So drive up, non-climate controlled, 10x10. So 100 square feet is going for 118 a month. And then an interior one is going for 169 a month, right? But that's a drive up climate controlled. Our climates that we're looking at are not drive up. And what I mean by that is, like, you can just drive right up to these and throw your stuff in. You can't drive right up to these and throw your stuff in, right? So let's see, AC, heated first floor, drive up. We're going to analyze the deal on these. My guess is that because these on the inside are not drive up, but they probably are climate controlled. My guess, and I may be wrong here, but my guess is that they're probably renting pretty similar. They might have come at a little bit of a premium. It really depends on the market. Sometimes they'll be above, sometimes they'll be below. They rarely rent at the same price. But what I'm going to do, guys, is I'm just going to find a price per square foot on these units, okay? So if 10x10, that's 100 square feet, okay? So we have $117 a month times 12 months is $1,404 a year that could rent at. So 1404 divided by 100 square feet, that could rent, I did times, divided by 100 square feet is $14.04. That's the annual rate, okay? So I'm going to come plug that in, $14.04. And what that gives us is that this could potentially produce $223,000 a year. Now, guys, I just ran one of these properties. I would look at all the other properties in the area to get a better picture. I just want to show you how I would do that. And I would try to get an average of all these different properties, okay? So we'll do that, and then let's find out how much that these outside units are renting for, right? Because, again, we have these 60 parking spaces. So let's see, let's do, there's that CubeSmart self-storage. Let's see if, we'll click on this. Sorry, CubeSmart, about your ad. RV storage. Let's see. Stuart, Florida. Find vehicle storage. 1.13 miles away. Let's view this on a map. Is it not going to let us? Well, while we're here, let's look at these. 10x10 storage unit, outside drive-up access, 116. We're in the ballpark right here for sure on those other ones that we underwrote. Let's see their vehicles. Sorry for moving around so much here, guys. So a 20-foot outdoor, 25-foot, 50-foot, 123, 123. Let's analyze. Let's do $110 rates on these. I think that's probably a little bit conservative. And again, here we have monthly rates. Here we did annual per square foot. I'm just going to do $110, and that's going to give us $6,000 a month of potential income. Okay. So what I've done here is we analyzed the storage component, we analyzed the parking component, and that right there is going to give us the potential of this property. Now let's go back and let's look here what these guys are claiming the income on this is. They said this thing is 95% occupied. Let's read this. 96% average occupancy. 96% average occupancy. So what we can do then is we can change this vacancy and concession. We can change this to 96%. But let's see if they're running any concessions right now, because I don't think they were doing the $300,000 a year, right? They're saying that they're projected from January to December to do 238,000. 238,000. So 238,000, okay, divided by the 303. So 238,000 divided by the 303, 78.5. So 1 minus 0.785, sorry, 1 minus, is a 21.5% concession rate. So they're saying that they're running a 21% concession rate to market. Okay, that's what they're saying that they're doing, which is giving us an economic occupancy of 76%. An economic occupancy of 76%, meaning for every $100 we could collect, we're only collecting 76. So it seems like there's some upside in this property compared to market, but they haven't really stated that. I haven't seen anywhere in here that they've said, hey, you know, below market rates, which is generally a pretty big push for people. So I'd want to dive in more. Why are they saying that there's no upside in this? And have we gone through and looked at the right competitors? Okay, but let's say that all that's true. Let's say that we're going to run, you know, a 21% concession rate to market because maybe the property is older, maybe it's in an inferior location, maybe it's harder to get in and out of, maybe something about this property means that it's going to rent for less than the competitors are. Now, I would want to go through to see if there is that upside in there. So let's roll through and let's look at the expenses, okay? Now, what I want to do, and we'll come back to LoopNet here, is find out what the property taxes are on this building. Okay, so it doesn't look like, sometimes LoopNet at the bottom will have the property taxes listed on here. Well, let's go through, and again, they told us the county here, Martin County, Florida. So let's do this. Let's go pay Martin County, Florida property taxes. And we're going to need the address here. Here we go. Pay current property taxes. And this is 1180 Southeast Monterey Road. Property taxes. Awesome. Looks like they've already paid their taxes. All right, so it looks like their property taxes that's interesting. They don't have any property taxes on here. Let's see if they've got their property taxes. It's interesting they don't have that. Real estate taxes, $12,335. So their current property tax bill, $12,335. And I'd want an assessed value. Let's go peek back in here at their annual tax bill to see why their assessed value. Let's go back. Let's look at the 2021 tax bill. I'm not seeing it in there. I'm not sure if it's something with this county in particular, which is fine. What we can do here, guys, is we can go back and look at the millage rate. So view 2021 millage rates. And we've got Stewart right here. View millage summary per $1,000 of taxable value by municipality. 18.96 per $1,000 of taxable value. Per $1,000 of taxable value. So what that is they're going to charge you $18.96 for every $1,000 of value. So how I would underwrite this here is I'd say the current property tax is $18. And maybe we'll do 18.96. So they're going to charge you this for every $1,000 of value. Okay, so $18 for every $1,000 of value, and they're approximately going to come out to a $35,000 tax bill. It's just like for every dollar that you purchase it for, they're going to charge you 1.8 cents. And so if we're purchasing it for the $2 million, $1,995,000, then the tax bill is going to come out to $35,000. Seems ridiculous, but that's probably how much it's going to come out to be. Okay, now insurance, $6,500. We're going to buy it for more, so our insurance is probably going to go up, be a little bit more than that. So we'll do insurance, and we'll do $600 a month, which would be $7,200 a year. We're just going to underwrite a little bit more. Property management, I'm going to do 6%. Repairs, it's an older facility, so I'll do $100 a month. Maintenance, I'll do $100 a month. Pest control, and let's see, by the way, what their utilities are. That's interesting, guys. They have a land lease in here. So they're leasing some land is an interesting component. I didn't see them mention that anywhere. Let's see. I would definitely call the brokers to figure out more about this land lease. Why is the land lease in here? We've definitely got to underwrite it as an expense, but what do they not own? Do they not own the land the building's on? Do they not own the land that the parking is on? Why is there a $37,000? I mean, that's over $3,000 a month of a land lease in here. Very, very interesting. We're going to have to come down in here, add another expense, and we're going to have to do a land lease. And they're saying that they're charging $37,448. $37,448 divided by 12 comes out to $31.20 a month. So we're going to come in here. We're going to do $31.20 a month, and that's going to give us the $37,000 a year. Let's go back and keep doing this. Property management, repairs, pest control is going to be at least $100 a month. And then they're saying that their utilities are $81.84 a year. $81.84 divided by 12 comes out to $682 a month. $682. Let's see. And then they've got lawn maintenance and pest control coming out to $400 a month. They've already got pest control up here, so we'll call landscaping $300 a month. And we'll do accounting and advertising. Accounting will be in our property management. Let's see, repairs and maintenance, $4,700, insurance, taxes. They don't have any advertising. I'm going to run at least $200 a month of advertising here. And then I need labor, right? So they have here, they have on-site labor, $30,000 a year pretty much, but they don't have property management. I'm going to keep this labor on-site that they have for $29,000 a year divided by 12 comes out to about $2,500 a month, right? So $2,500 a month. Let's plug that in. Whoops. There we go. And what we're going to come out to is $142,000 a year of expenses. So just going through, explaining everything, let's go through and check out the pro forma now, which is going to put our income, our expenses, our debt service, and everything together. So if we buy this deal at the $2 million, we're going to lose $46,000 a year, negative $46,000 a year of cash flow. And this is the point of where people are still expecting higher prices. Prices have definitely started to come down, but there's this lag between where interest rates are and where sellers' expectations are. Because if we say did this deal on a 4.5% interest rate instead of a 6.5% interest rate, right, then what would our cash flow be? We'd probably be pretty close to break even. Maybe still a little negative in the front years. Negative $25,000, so still losing money here. So it looks like this deal is, they're basing a lot of the value off of the land in the front to build the additional storage, which is fine. It definitely looks like it has value, but I want to buy off of existing cash flow. I don't want to buy off of potentials and maybes and having to do this work. I want to buy off of the cash flow that's in place. So if I were going to buy this deal and I want to earn a 10% on my money, I'm just going to come over here and I'm going to do a 10% cash on cash. And we'll say I want to earn it by year 2, and I'm going to seek the answer, and it's going to tell me how much to pay for this deal. It's going to adjust my property taxes. It's going to adjust my mortgage. It's going to adjust all of the good stuff of what I need to pay for this deal in order to hit that number. The number I'd offer on this deal is $1,094,056 in order to hit my 10% cash on cash goal. So that's how much I would offer for this deal. I would offer $900,000 less than what they're looking for. And even then, guys, I would really want to know what's up with this land lease, right? And the land lease is such a big chunk of expenses. And also, when I'm assuming that I want to earn a 10% cash on cash, I'm saying to myself that I want to buy the property. I might not even be buying the whole property. I might be buying a portion of the property, or I might be buying no land, and I might just be leasing the land and buying the buildings on top of it, right? Whenever you do that, whenever you have buildings that sit on top of land that you don't own, that's called bifurcation. Bifurcation is whenever the buildings and the land is different. They're by two separate, bifurcated, right? So that may be the situation here, which seemed kind of crucial to understand and pitch on. Anyways, guys, hope you found this video helpful. If you do, please do me a favor, just hit the like button, subscribe to the channel, absolutely free, helps me grow, helps get this message out to other people. And if you want to get on my property stats, if you like this, where we could goal seek, where we could run all the different scenarios, all you have to do is go to mypropertystats.com. And if you want to start a 14-day free trial, I'll drop the coupon code in the description below. Other than that, hope you have a killer day. This is how you analyze self-storage deals going into 2023. Be great.